Hi, everyone. I'm Raj Kumar, President and Editor-in-Chief of DevX, back once again from my home, like just about everybody that we've been having on this program for many, many months now. And here with a really exciting group of entrepreneurs and leaders in the fintech and financial inclusion space. This is a conversation we're doing, a so-called DevX Coffeehouse conversation, trying to replicate what might have happened in the old world before this pandemic, where friends and colleagues get together to have a real chat. And that's what we're meant to do today. And we're doing this one in partnership with the Milken Institute. We're really excited to be partnering here and have Stacey Warden from the Milken Institute to kind of co-lead this event with me. Hey, Stacey, thank you so much for doing this.
It's an honor.
And really today we're diving deep on the issue of fintech and financial inclusion. I'll try to just give a couple of words of why, and then I want to say who all has joined here in this conversation, because we've got some really exciting leaders from around the world that are part of it. I think I have my stat right that if you look at the stock markets of the world today, just a few big companies, I think 5 of the biggest, the Amazons and the Googles and the Facebooks, they're now something like 15% of the total market value of all the world's companies, right? And why has this happened? Well, you've seen, at least in part, that digital trends were accelerating before the pandemic. Then we got hit with lockdown orders, stay-at-home orders all over the world. Life really shifted. And we've seen trends that already existed accelerating dramatically. So that's a story I think a lot of us in the wealthy world, advanced economies, high-income countries are really used to. The question is, what does this mean for people who are in low-income countries or people who are really unbanked? And that represents a lot of the world. People who are really relying on some of the newest fintech to access the financial system, to access bank accounts, savings, credit, insurance. And we want to understand better from the entrepreneurs who are right at the forefront of this. What does it mean? Are we seeing a similar acceleration? Is fintech transforming the world of finance for the unbanked of the world, for people who are in the informal sector, for lower income countries? What are the big trends? What's happening? Will we see some of those trends overtake what's happened in some of the more advanced economies as we've seen in some other areas in the past? So this is the conversation we want to have, hopefully really open. And let me just pass it over to Stacey to give your thoughts here in terms of what you want to get out of this, and then we'll jump into the panel.
No, I mean, I think I want to get out of it what you want to get out of it. Africa is such a kind of an anomaly in that, 66% of African citizens still lack any kind of access to the formal banking system, whereas 46% of global money market mobile money transfers take place in Africa. So it's this kind of very interesting lack of financial inclusion, but being at the bleeding edge of fintech kind of at the same time. So I think the challenge for all of us, and I don't think the world is so different because of COVID, I just think the stakes are much higher because of COVID, is how to make these two ends kind of come together. And I think the framing around that is in a couple of areas for me, and then I'll kind of launch off, maybe even starting with Elizabeth, is that, payments, and how can payments be driven, in my view, to kind of almost zero as a kind of a public good, right? And then what does that mean for the digital financial infrastructure around that? Can payments be made on alternative rails to the expensive credit card rails that we know in the rich companies, and how can Africa kind of show the way on this? And then as Evans is, devoting his waking hours to getting access to finance and getting access to credit to entrepreneurs, what does that look like, and how can we what does the next generation of that look like, and what does it look like in a COVID world? And then Darlington, of course, who is like taking on and financial head on, and as the marketplace app, including financial services on the continent, and what does that look like? And of course, E, as one of the just very early successful entrepreneurs in this space, and with Elizabeth as being, really the first crypto as a means of FX bypassing the payment rails. And so, for me, you've really gathered an incredible group here to kind of get at this elephant in all of these different ways. And so, I'm myself very excited for the conversation.
Yeah, me too. And let me just say for everybody that you, Stacey, you lead global markets development at Milken Institute. You've had a career at JP Morgan, at the US Treasury, at the Center for Global Development. You've been all around this space. And this is what you think about every day, is how do you take the markets that exist, the financial markets, and develop them in a way that actually serves people? and serves, people in all different circumstances around the world. So it is an exciting moment. I'm so happy to get to have this conversation with you today.
Right. But that narrative is less and less the West learning from Africa as it is Africa teaching the West. And I want to make sure that that's really well understood in the context of these conversations.
Absolutely. Absolutely. Well, as you said, we've got an exciting group of people here, so maybe we can just dive in and I'll mention who we have, and then we can talk a little bit more about your backgrounds as we get into the conversation. But joining us on this call is Aboyeji, who's the founder of Flutterwave, Elizabeth Rosiello, who's the founder and CEO of Aza, formerly called BitPesa, if you're more familiar with that name, Darlington Mandivenga, who's the group CEO of Cassava FinTech International, and Evans Osano, who's the director of capital markets at FSD Africa. Each of the people who are in this discussion, just as Stacey said, brings kind of a different element to it. So we're going to get into lots of issues around fintech and financial inclusion. I know it sounds like you wanted to start with Elizabeth. So Stacey, let me throw it to you and see what you want to ask.
Okay, so Elizabeth, it seemed like every currency needs some kind of like translator, which is the US dollar. The exchange rate between, Rwanda and Kenya is actually quite stable. The problem is that they're both volatile against the dollar, and there's this kind of crazy intermediary step, and you decided to do something about that.
Yeah, exactly. So, when we first started out, Stacey, we started in Kenya where, again, as you said, the mobile money was at its bleeding edge. And it was very easy for us to enter the market because of that. So in some ways, a lot of the African fintech has started with mobile and then moved on from there. Now, we've actually evolved in the last 7 years, I'd say year 2, into a fully B2B wholesale business. But it was that original retail accessibility by mobile that let us get started and play around, almost like a sandbox. And to launch our pilot was so simple because you can plug into the APIs of those mobile money to get started. And a lot of the companies in the US are just seeing that now, and in Europe. So in that way, Africa has been a real leader. And there were a lot in my class of fintechs when we started 7 years ago out in Kenya and then later on in Nigeria. But what we've seen right now, when I first started making a market between the Kenyan shilling and European hard currencies, other African currencies, I didn't have a counterparty in those places. There weren't as many fintechs kind of with that easy on-rail as I had in Kenya. And so we actually used Bitcoin. But as we built, so that was actually a way to use a fintech innovation to get going. But what we realized pretty quickly was not a lot of people were using Bitcoin, and it was hard to find liquidity. And if you're trading African currencies with low liquidity, doesn't make a lot of sense to add another currency with low liquidity. So what we ended up realizing, which a lot of African entrepreneurs realize, if you're going to sell a chicken sandwich, not only do you have to find the chickens, you have to grow the wheat for the bread and buy the truck and create refrigerators and do the whole supply chain. So if we take that back to the currency markets, what we ended up realizing is that we had to become a market maker on both sides. So we opened up businesses in West Africa, in North Africa, in South Africa, and we opened up accounts there, and we started to trade on our own balance sheet as a real market maker. And what's interesting in that is that during COVID also coincided with a petrol price crash. And when petrol crashes, petrol economies struggle to find US dollars, which are the gasoline that fuels their economy. So what happens in Nigeria was all of a sudden non-dollar transactions dried up because they crossed through the dollar. So you have transactions going from Nigeria to Uganda, Nigeria to China, Europe to Nigeria, drying up because there's no dollars to act as that intermediary. Now, we do have some clients who still use crypto to go as a middle currency, but really what we need is a simple thing, a market maker. And you could say, hey, that's not fintech, that's not some sexy app. That's just basics of capital markets, putting a market maker in there. But the way that we are able to enter the market and even become a counterparty and become a market maker was because we use fintech tools. We use lean agile methodology. We use this new startup mentality to build a very lean business that can compete with the incumbents. And so I'm saying a couple of ideas here, but one of the other ideas is that the fintech philosophy actually helps new entrants come into these markets and compete on price, on service, on speed and innovation with these big banks. And the innovations we use, mobile money, crypto, helped us enter these markets and become almost a steady mid-sized player. And now we're trading $200 million a month, and we're quite active in these markets, and we trade 30 different currency pairs. We've kind of got our head above the parapet using these fintech innovation tools and not being afraid to try different innovations and finding our business model. And what we're seeing during COVID is finally customers, blue chip customers coming to us because the normal routes, the non-fintech routes are failing them more and more and more. And what we said all along with using the dollar as an intermediary is expensive and inefficient. And that became very apparent. So basically the COVID period has just shined a huge flashlight on the problems that we see globally and really exacerbated them. So everything that we thought was true is doubly true during this period. And for those businesses that use innovation to kind of really build new types of businesses in the capital markets and in financial services, those are flourishing.
And it seems to me, Stacey, get back to your earlier point about how the innovation is really coming from Africa or lower income countries in general to more advanced economies. A lot of that's exactly what I think you're saying, Elizabeth, that it's not that your business couldn't have existed before. It just would have been really expensive, right? I mean, somebody could have created a market maker and traded these currencies, but they would have taken on so much risk and had to
without
charge
APIs,
so much it wouldn't
without
have been
open
practical
banking.
for the parties.
Exactly.
And you found ways to drive those costs down.
Exactly.
Right. And I think that's probably the same thing across when you think of payment processing, well, the individual consumer level. So much of this is about, well, there were ways to spend money, but they're really expensive. And so they're out of reach. The traditional credit card associations is out of reach for most consumers in the world. And so the fintech philosophy, how do you get this down to the cheapest possible solution that's really convenient, it's going to work for everyone, can really drive change across the industry globally.
Exactly. And these principles of automation, scale, and agile thinking. So if it's not working, how do we change it? As opposed to when you talk to a large bank and they say it's a 3-year process to change that, to be able to really learn from your mistakes and iterate as you go forward is something a lot of these small new entrants have shown is actually better. And a small company can do better than a big company.
Yeah, maybe we can get Darlington's take on this. Darlington, I mean, I think most people following this probably know your companies. It's a very large scale, and when I look at the map of Africa and all the fintechs, you've got a hand or had a hand in many of the different ones that are out there. What is your big picture take on the conversation so far, and on what the pandemic has meant for the acceleration of these trends?
And unmute. Make sure you unmute.
Raj, thank you very much. And it's good to be here. And this is a very exciting topic. But for people to understand why we do what we do, let me start by saying that as Cassava FinTech International, we envision a socially and financially inclusive future that leaves no African behind. And our mission really is to improve the overall quality of lives for those Africans by offering them affordable access to social and financial services through technology. And we operate mainly in 4 verticals. There is mobile money, remittances, insurance, and payments. Those are very distinct areas. And we've realized that even across Africa, there's a lot of fragmentation. So much so that even when we're reviewing our own strategy, we realized that there was fragmentation even from within. So we started developing this integrated platform that we are calling the Integrated Social Payments Platform that brings all these pieces together into one platform. But if you allow me to just comment on the impact of COVID-19, for us, it has actually been positive for business because it challenged us to start thinking very creatively. And I must give credit to our teams for having been very multidimensional in their thinking way back, because if you look at remittances, which Evans highlighted before, and the reason why remittances is at the top is because it has got real impact when we start talking of financial inclusion. There's about $62 billion that is remitted into Africa on an annual basis. And guess what? Before the advent of mobile money, that money was terminating into physical brick and mortar outlets.
Western Union and places like that.
Exactly. But now, because of integration with mobile money wallets, that money is terminating directly into mobile money wallets, and people do not have to go out to risk their lives, during this pandemic. However, the traditional players you are talking about, they have remained with the traditional model where people have got to move out, and they have lost business to those that have already upgraded to an online play. And our business has got both offline and offline. So we've seen a major decline in the offline option, whilst we are seeing an increase on the online side. It has been very exciting.
Let me throw out an idea for you, Darlington. You tell me if I'm right or wrong about this. So, the traditional players, one of the reasons why they've hung on to their approach is it's lucrative. They charge high fees, they make a big spread. And part of the reason there's so much fragmentation in the fintech space across Africa, when I look at that map of Africa I mentioned before, and I see a lot of your products dotted around, there are so many players. Yeah. It's a big continent, a lot of countries, a lot of big economies, but still there are so many players. And is that in part because of regulatory capture? Because maybe traditional banks, traditional financial institutions have basically engineered the rules in such a way that slows down the adoption of fintech players like yourselves. Is that something that you see from a policy standpoint standing in your way?
It is true. Just like regulation in a way also sometimes is an obstacle, but we have realized that regulation can only slow you down, but eventually you break through. So we've been knocking on the doors of regulators day in and day out. And the traditional players themselves have started realizing they are losing market share to fintech because they cannot continue to charge the high prices that they have been charging. Okay, so prices have started to come down and their existing models are not sustainable anymore.
Can I just say, and after China, Africa has the most profitable banking system in the world.
Yes.
And the reason is not so much because they throw up regulatory barriers for fintech, although they do. It's because they pay nothing on deposits, they buy government paper at double-digit interest rates, and they don't lend. They are not doing their job. That's why they're profitable. And that's where fintech needs to come in and be disruptive.
Exactly. And that is why, Stacey, you mentioned a statistic of 66% of Africans not having access to formal financial services. In certain markets where mobile money has not taken off, it is as high as 85%. And all that business that traditional banks are losing, fintechs are picking up on. And they're gaining ground. And banks have realized now, so there's this phenomenon now called fintegration, where banks have started integrating with fintech.
10 years later, but it's happening. Yeah.
I'd love to get some others into the discussion, and I want to come back to some of these points you just raised, Stacey. I think there's a lot there we can unpack. But E, I want to get your take on this. You, for those who don't know, I think people are pretty familiar with you who are joining this, but you were the co-founder of two of Africa's most successful technology companies, Andela and Flutterwave. You've really been a forward thinker on these issues around financial technology. What is your take on the conversation so far? What are you seeing in terms of the market given the pandemic? Is there more investment coming into the fintech space? Are fintechs growing faster than they had predicted to grow? What are you seeing happening?
And before you start, E, could I just ask you, despite all of your success, are you still living in your car or what?
Yeah, I'm trying. No, I had to be in the car because the apartment is noisy. I've got a 1-year-old and she came in company, and I thought the car's slightly better. And also we're just around the block. Anyway, just to answer that question, I think one of the biggest shifts that we've seen is basically that people are starting to there's a lot less novelty around what are we able to do with this payment infrastructure or these payment tools. And we're starting to now move into the era where people are asking, what is possible for this thing to do for me? So people are no longer excited about payments. Like, these are par for the cause. This is cool. But what we're starting to see in the marketplace is we're seeing a big kind of shift to how can we leverage this infrastructure to add value to people's actual lives. And I'll say there are 4 kind of major group polls that we're seeing. The first one is around what I call value-added services for remittance. So we're starting to see cross-border interaction in things like, for example, in the mortgage system, leveraging mortgage and credit systems in America to be able to offer diaspora home loans locally for their families, or doing the same thing for healthcare, letting somebody who lives in Ohio buy healthcare for their grandmother who's at risk of COVID. And the same models are going to replicate across multiple different things. So the remittance conversation is not just about sending money into an M-Pesa wallet anymore. It's about, okay, what's possible when you can send money into an M-Pesa wallet? Like, what changes about the interaction that you have with these services? The second group poll that we're seeing is what we call asset-backed lending. So a lot of people are, especially because of the LDRs and especially Nigeria, they're pretty wonky. There's a lot of money in the market, but there's also a lot of inflation. And so people are thinking differently about cash because, quite frankly, getting cash today, doesn't necessarily assure you of being able to afford anything really. So people are now looking for, and also their major challenge is
You're starting to break up on us, E. Maybe we pause you for 1 second because you're starting to break up a little bit. And we can just maybe stay on that first point around remittances for a second. It seems to me like...
Can you hear me now? I'm sorry. Can you hear me? We
can hear you. You're just breaking up a little bit. Go ahead and continue.
Okay, I just flipped the Wi-Fi. So I was saying 4 group polls. I talked about remittances. The second thing I wanted to quickly talk about was asset-backed lending. So people are asking, I don't want the cash. What can this cash help me make a productive living doing? So we've seen some amazing things on the phone side, people wanting phones so they can either sell credit or sell airtime or become mobile agents, just so they can repay the value of the phone, knowing fully well that the phone is the enabler. Or even something as simple as a refrigerator. We backed a business in the car business. So basically we give people cars and they can basically earn a living on Uber. Again, this is another kind of big group poll for the future of fintech. The third group poll that we're seeing is wealth management. People sometimes forget that poor people also want to save and invest. However, saving and investing in your country, which is under incredible regulatory strain, fiscal strain, is not necessarily a wise idea. If your currency is crashing, and for example, with the Naira, it's been devalued, by 100% every year for the last 8 years. You really have to ask yourself real questions about whether you want to store value in that form. And so we're starting to see a big explosion of wealth tech, where people are helping Africans become global investors, which is somewhat counterintuitive, but it's really what's going on in the market right now. So a lot of Bamboo, there's a lot of startups, Rise, Vest, Piggy Bank, all supporting Africans to be able to leverage their local currencies and their earnings to be able to get global returns by being global investors. And then the last one is really kind of like a big policy issue. And it really centers around the macro environment within which fintech is currently taking place. We've always imagined that, okay, if we put the fintech in place, it works, but there's a massive productivity issue when you do business locally. And increasingly, we're seeing a big shift with people working remotely, people doing work for global multinationals and so on. But the financial systems don't quite enable them in the way that we might assume for all sorts of reasons, including, barriers to access, bias, and maybe legitimate reasons like fraud. And now, there's a big shift to, what is possible to do to fix those issues in terms of being able to earn in dollars and spend in Naira. So basically, the way I see it is the bare bones infrastructure business is done. I feel like we're kind of, innovation there will be purely marginal. And where we're headed is people are asking, now we have some basic form of infrastructure that we can be sure will keep improving. What is possible to do on top of that layer?
Makes sense. So really, it's a lot about value added. You're saying the basic infrastructure is there. Where do you add value? And a lot of that, it sounds like from the examples you're giving, are similar to the theme we heard earlier about just lowering prices, right? In other words, you could have sent a remittance back home to your family and they could have taken that money and bought health insurance, but there was a lot of cost associated with that. And now you're saying, hey, you can make this really efficient and drive down the price. Or the same thing with a mortgage. A diaspora family in the US could have tapped their mortgage and taken cash and sent it back, but you're paying your mortgage company in the US, you're paying the remittance transfer fees, you're paying FX, then you're paying tax. Right? I mean, there's probably layers and layers that mean people don't really do that. And now it's possible.
Exactly.
Yeah, I wonder, Evans, if we can get you into the discussion, because capital markets are your area of focus. And some of what we've talked about really has touched on those capital markets and certainly currency markets. What is your take overall on where the capital markets fit into these trends that we're discussing so far?
Yeah, no, thank you very much. And maybe before I make specific comments on capital markets, let me give a little bit of background of where I come from. So FSD Africa, the institution I work for, is a development agency focused on deepening financial sector in Africa for the developmental goals. Now, we see fintech as very important as an enabler for either increasing financial access, which is an area we've been working over the years, or encouraging flows of capital so that we can be able to increase development, basically raise money for developmental goals and all that. So in this space, we do quite a bit of work around regulation because the regulation is very important. I think it's been touched on a little bit. I can elaborate a little bit on that, but it is a very important area. And then,
maybe,
of course,
maybe Evans, just for people who, I'm sure many people know M-Akiba, and you're one of the developers of that, just for people to be aware that got government securities out to people directly.
Yeah.
So that's
exactly.
The kind of thing.
Yes, exactly. So I'll make some comments around that and what I see, how I see fintech basically being used in the capital market space as well. But then, of course, the other areas that I needed to just mention very quickly that we've been focusing on quite a bit over the last few years. One is around the professional capacity development. We have also been supporting market players, so banks or non-banks, and so that they can be able to increase the access. And then, of course, investment. So we have invested in MS Africa, for example, which is the largest mobile money hub in the continent. And then we've also been trying to forge partnership because one of the challenges I think that has been highlighted is that we have so many players and we need to be able to have scale. And one of the areas where you can have scale is by having collaborations and partnerships and all that. Now, just turning back now to the question of capital markets, we get into a very regulated industry. The products that we have in the capital markets are relatively difficult to understand for an average person on the street, and that makes it much more challenging. But it doesn't make it impossible to try and support. Fintech is not all about payments or remittances and all that. We see applications going a long way also to support insurance markets or supporting capital markets. Now, within the capital markets, especially if you're looking at raising large pools of capital and then understanding that these are regulated markets, then you have to work very closely with the regulators because you're going to issue a bond in the market or you're going to issue shares in the market. They have to be approved in order to protect consumers and all that and investors in those markets. But in this current COVID environment, it can become very difficult to get your approvals coming through because historically what has been happening is that investment banks, issuers, arrangers will send bulky documents to the regulators across the street or across cities from Lagos to Abuja. But that's not very easy to do. And therefore, as we think forward, we also need to enable the regulators to be better placed to be able to serve the market. So we need a digital transformation of the regulators, what we call RegTech or SupTech, in order to also to manage the intermediaries in the market in terms of supervision. That's very, very important. And I can provide some insights on some projects that we are supporting, especially with the Securities Exchange Commission in Nigeria. That's an important area. And then, of course, the players in the market themselves need to find ways of distributing products in the market. And they can't use the traditional face-to-face interaction. So we need to have also opportunities to have robo-advisors or some sort of a branded advice as well, so that we can be able to reach more segments. So at the beginning, I talked about the complexity of capital markets products. And I think I want to bring in the M-Akiba or the Treasury Mobile Direct dimension here. So if you're talking about very complex products, then, and you want to distribute those products to the average person, it can become quite challenging from a consumer protection or KYC perspective. So generally starting with relatively safer investments is quite important. So government securities provide a very good avenue. Traditionally in Africa, as in many countries, those are wholesale markets. So you issue government securities and banks buy. I think Stacey mentioned that at the beginning. Banks buy, and the retail investors don't have access to those markets. But it's very costly for debt managers across the continent to distribute those securities to individuals because the distribution cost can be quite huge. And that's why we can leverage technology. And Emma Kiba or the Treasury Mobile Direct is a good example of a product that has been designed where securities are distributed through the mobile phone to millions of investors. And then you're talking about low levels of investment. So maybe $30 million, $30, $10, or even less than that can be distributed in very small denominations that make it easy for basically an average person to invest and basically over time accumulate their savings, because that's a very important dimension as well. So we cut distribution costs, we increase the potential number of people that we can reach by these investment products and all that. We can also have funds that basically invest in government securities, and then those funds can be distributed again through digital channels that reduces the cost of distributing, but are also managed in a manner that provides liquidity, because a lot of these investors will be able to access liquidity as and when they need it, which is a very important consideration as well. So maybe I can stop there and I can provide some insights in none of the areas that I've touched on.
Yeah, I mean, to me, it connects a lot what you just had to say. I don't know what you think, Stacey, but it connects a lot to E. E was talking about wealth management, which you're so right that when we think about that, we're thinking of the wealthiest people in the world. But actually, now that you can have robo-advisors, now that you can lower transaction costs, you could have average people taking their money through a mobile platform and buying government securities in their own country, buying government securities in other countries, and having their assets in different currencies. It creates all these opportunities, which should develop the capital markets too. It should provide more funding for local capital markets, you would think.
Yeah, exactly. And maybe one other thing I could also talk about is we've also seen peer-to-peer platforms coming through, crowdfunding and all that. But in Africa, what we have seen mostly is donations-based or rewards-based kind of platforms. But over time, I think we are likely to see more investment-type platforms, that encourage equity investments, which is much more difficult anyway, and debt-like instruments, which will enable issuers and intermediaries to interact directly, cutting off intermediaries in between. So we haven't seen the scale of that, but that's what I see the future, moving to some extent.
Let me just, yeah, go ahead, Elizabeth. You're on mute. You're on mute. Unmute. Unmute.
Make a comment here. In 1998, you had the Stuart Rutherford microfinance book, which changed a lot of lives, about the savings of the poor, showing how much, quote unquote, the bottom of the pyramid could save. So we've known for decades that this is possible. And we've had the infrastructure for at least one decade. Now, why hasn't it happened? And I think you have to look upstream. You have to look up the vertical. Why? And that goes right back to what Stacey said to begin with. The big banks ask for 17%, 15% interest payments and pay zero on deposits. They have no incentive to share capital, to distribute capital. And they're lending on the international markets or subsidized lending in USD, and there's no sort of local currency debt markets. There's no sort of trickle down effect, and there's no funding that comes out of that. So when the fintechs have entered the market, they've had to go to Silicon Valley to get investment. They've had to do regulatory arbitrage or leapfrogging, or get wildly in trouble like we did when we first started in our first market, and somehow survive that. And it's been really a struggle in sub-Saharan Africa for those three reasons. And I think it's this kind of this incumbent layer, which hasn't let new entrants in a lot of ways. And I know FSD has worked with the largest players, which is great. So you've seen the largest players innovate, but where are the incumbents allowed to come in? And so, I think what we've seen Nigeria do it a little bit differently. When Nigeria came in, it's such a big market. You saw E's first company and his second company spawn 10 other companies. So when, when they came in, 10 more popped up right away, and they kind of immediately got partnerships with banks. They immediately scaled. And we haven't seen that in East Africa in the same way. And we certainly haven't seen it in South Africa in the same way, and for two different reasons. So just kind of looking at the bigger macro picture and the infrastructure, regulatory environment, government permission, and just, competition, and why we see the different regions of the sub-Saharan Africa allow that innovation to scale and become growth stage companies. So if we're looking at where are the growth stage fintechs, they're all in Nigeria. And you're just starting to see them come into other areas. And a lot of the ones in East and Southern Africa have struggled in different ways, or gone straight to corporate, or been spin-offs of the largest incumbents. So I think it's really interesting when you want to think of the entire financial services system, what are the inducive environments to see not just, the first product rollout, which is cute, but how does it really take scale and really grow and really have a trickle-on effect? So, you have that really cool lending product, but without a bigger wholesale product, it's not going to work. And we provide liquidity for a lot of fintechs, and we provide foreign exchange for a lot of other financial services company. And, we're another layer of the ladder. And without us, those companies would struggle. And without, the people above us, we would struggle. So you really have to build up the whole ladder. And I think it's been very inefficiently and, not so evenly built in a lot of places.
It is critical to get this regulatory environment correct and I'm going to push back on this idea that the infrastructure is there and we just need to, I think, what players like FSD and others need to do is really double down on getting the infrastructure right. And you look at, say, M-Pesa, they were a great product, but immediately they had kind of 80% market share, right? So Ghana looked at that and said, okay, we're not going to let that happen.
We're heavily 49%.
What?
Officially, they have just 49%.
Oh, yes. Well, Ghana looked at that and said, okay, we don't want that to happen. So if you're a fintech, you have to get a license through a bank. Well, that was just a complete disaster for them. Tanzania looked at it and said, the solution is interoperability from the beginning. And we're also not going to mandate it. We're going to kind of use more a market incentive approach to make sure these telcos can talk to each other and people can, give money across telcos. That's a kind of a poster child for sort of this is old Tanzania, but that's a poster child for kind of how to do it properly. And before I give up the floor, I want to add something to E and Evans's very good list of opportunities. But I think one more is this data as an asset that retail households can have, marshaling data about their spending activity, about their payments activity, and about their life activity that they can use as a way of getting credit and a way of demonstrating their credit worthiness. And that requires infrastructure. That requires credit registries. That requires collateral registries. That requires, credit bureaus, collateral registries. And that's the kind of thing. And then just the digitization of paper. I know it's not sexy, but that is a critical priority to get done on the continent. And if you can get that kind of thing done, then the problem is not the entrepreneurs, right? It's the problem is this underlying, ecosystem that would enable them to thrive.
Yeah, we haven't gotten into credit scoring, companies like Tala and Branch that are trying to upend that part of the market. We can get into that in a minute, but Evans, go ahead, jump in. What did you want to say?
Exactly. I just wanted to jump in because, we're talking about a very big issue here, cutting different ways. We talked about payments, lending. Now we're also talking about capital markets. And when you look at the regulatory landscape for all that, it's actually quite different. What we need on the payment side or on the remittance side might be slightly different from what we might need on the capital markets. And that makes it even more challenging because in a way, different regulators have to speak. And that makes it, if you're talking about the regulatory sandboxes, for example, and you have a product that cuts across several regulators, it becomes a bit challenging. And then of course, if you go cross-border, it makes it a little bit more, challenging too as well. So it's something that we need to, bear in mind. And I may speak from a different, angle because I'm much more focused in terms of how do we get these beyond just the payments and beyond just the remittances and all that. And what else can we do to make the whole ecosystem work from a capital raising perspective and also from, can I call it, a financial inclusion perspective as well. I thought I should just make that distinction too.
Yeah, I appreciate that. And maybe Darlington, you can come in and want to hear whatever you have to say. But one thing that's on my mind that maybe you can clarify, when we hear about this idea from Elizabeth of a ladder, and we hear, about all the fragmentation that we've all described. And I know earlier on, Stacy mentioned Ant Financial, the now going public giant financial firm in China, but all over the world, all over Africa, Alipay. You see companies like Google are in the space, Facebook is in the space. Is this ultimate solution, quote unquote, going to be that the biggest players in the world just come in and consolidate markets like the continent of Africa? Is it going to be somebody just buys the ladder? They take ease companies, innovators like him, and they're just acquiring and building, and they're going to own this thing vertically in order to reduce the fragmentation and make it make sense. How do you see this developing, Darlington?
Yeah, Raj, this issue of fragmentation is really a big issue. And, you did highlight that you see, fintechs dotted everywhere. But if you do a review of most of them, they are not successful. If anything, they just have websites, but there's no activity whatsoever. They failed to scale, and we've started to see consolidation in Africa. I think, in Africa, there's a proverb that goes by, if you want to go fast, go alone. But if you want to go far, go together. That speaks into partnerships, into collaboration, into integration, into interoperability. Elizabeth did mention that if you look at Nigeria, there are notable successes there, but that is also a function of the size of that market. If you've got your act together, Nigeria as a country is a big market. And that starts being a problem on its own, in that a lot of people view Africa as one country, but this is a continent of 54 distinct countries. And unfortunately, that works against us, because you've got to deal with different regulatory requirements. Yeah. But we can't get tired. We have to keep on knocking on the doors of regulators. You talked about what the Alipays are doing and financial are doing. And it will be very sad if we sit and wait for them to come and buy us out and consolidate. And Stacy did mention that we are on an ambitious project. So what we have done is we have observed the success of mobile money in Africa, in a number of countries. And we have more experience. We know Africa better than the Chinese. We know Africa better than the Americans. So they can come with technology, yes, but they can never know Africa as we know it. So we've got the infrastructure, we've got the customer base, we've seen what works in mobile money, we've introduced innovation in savings and barrier societies and the like. So what we have done as a company, we have taken our successes in mobile money, and we have said, why don't we integrate it to social media? So we have built a platform that is nearing the end of its development, which combines the power of social media and the power of mobile money. So on the one platform, you can do instant messaging, voice and video calls. You can do everything that WhatsApp does. But within that same platform, you're also able to perform P2P, merchant payments, bill payments. You can get credit and the like. And then in addition, it is projected that the e-commerce sector is worth $75 billion by 2025 in Africa. You've got to be able to integrate that into one platform. However, we cannot do it in one market if you are to scale. So what we've been doing is we've been going for the past 2 years, knocking on the doors, speaking to MNOs, banks, insurance companies, payment service providers. And I'm happy to say that we've made significant progress. And this is why I'm saying we are nearing the end of our development, where when we unveil this, we will have activity across multiple countries in Africa. And we believe that is a model that is almost similar to what WeChat has achieved in China. And they now want to come to Africa. There was an announcement in the past couple of days where they've partnered with one MNO. But again, that is in just one market. What about the other markets? So it becomes a challenge. So we are ready to start growing. By the time they come, they're talking of mid next year, towards second half. We believe that we will be somewhere. We want to try and do this. So that's the ambitious project that Stacy was talking about.
Really fascinating to hear.
Yeah.
And I see E nodding. I don't know if did you want to jump in? Did you have something you wanted to add on this, C?
Well, I was just going to say that even though they may not know how to penetrate our markets, they can always hire people who can. So we shouldn't be so confident about the local knowledge angle. I mean, in Nigeria, we had OPay come into the market from China via the US NASDAQ. And they've changed the landscape here completely from a penetration standpoint when it comes to mobile money. And a lot of people said it wasn't possible. The regulation was the issue. There were all sorts of assumptions, and they came and disproved all those assumptions and built a pretty robust payments business called OPay here in Nigeria that has made record numbers and is almost half of the volumes of payments in Nigeria. So I only say that to say don't underestimate capital.
Yeah, sorry, Raj, but you will know better than everybody else that there are reports recently that they've started, that same company you have mentioned, they started shutting down some of their businesses.
Well, they shut down a lot of their
money,
experiments.
Yeah.
A lot of the experiments is shut down and refocused. A lot of the money is in the bank, and they've refocused on the mobile money play they came with all the extra 5 million users that they've gathered through their many experiments. So, and I'm a witness to that. There is barely anybody you can talk to who doesn't have an OPay account, right? You literally, there isn't. So I wouldn't necessarily take that as a sign that their business is declining in any way.
But I want to circle back to this kind of what I consider to be the essence of these platform plays, right? So if you're Opera, which is now moving into the payment space in Africa, what Opera has as a browser play is it knows what you're searching for, and it can use that to make credit decisions about you, right? I mean, WeChat, Tencent WeChat, when your aunt gives you that same gift every year, and you can tell from that payments, and that, your friends look a certain way, and you've got very close kinships, you marshal that data. And I'm sure that's what Darlington is also, that's their kind of big play. You marshal that kind of unstructured and non-credit score type data to enable you to make these credit decisions. And that's why these platforms are really so critical. And that's why I think, even though, Evans thinks payments is boring, I think it comes down to, at the end of the day, if you get identity right, and if you get payments right, anything can happen in Africa.
Yeah, I think, Stacey, the question is, what is the business you're in, right? And I think if your business is really facilitating a specific transaction, a payment, that's one business, and it might have a certain level of profitability, a certain horizon that you're willing to take. You take some risk. But if you're Facebook, you're in a different business, right? If you're Google, you're in a different business. And there, if you're in that different business, you might be willing to put a lot more capital at risk. You might be willing to have a much longer time horizon, because you want to own a customer relationship across everything they do. You want to own the data behind them as well. And that's different. And if your economics are different, it lets you compete in a very different way.
Yeah, the next wave of this is embedded finance. It's payments embedded in other things, anything else that also offers payments, in my view.
Yeah. So can I jump in and just say something? I don't know that I'm digressing a little bit, but just talking about, we talked about fintech now as an enabler, but fintech can also a good investment opportunity as well, and they need capital to be able to grow, to scale, and all that. So far, what we've been talking about is getting money from the Silicon Valley or from wherever it is, from London, wherever it is, and to invest. What about creating an ecosystem locally in Africa and all that? I believe there is a network already of high network individuals, venture capitalists and all that can be mobilized to raise capital that can support local solutions and all that. They can scale, and then once they become hopefully very big and they need much more bigger pools of capital, then maybe you can look elsewhere for that. Just an idea. And I don't know whether the entrepreneurs who are here have tried that, or I don't think that is something that can work.
I can speak to the experience in Nigeria. We just I haven't slept much in the last 5 days because we've been working on legislation in the Nigerian parliament, which should finally pass today, which for the first time allows banks to invest in venture capital funds. Before now, that was illegal. banks could not invest in venture capital funds. So there are a lot of structural issues. I think there are other issues we have to deal with. For example, repatriation of capital, because everybody wants to be able to get their capital back, and so on and so forth. There's a lot of very strategic and structural plays that are guiding the current group of foreign capital that's coming into the continent, and a lot of it is primarily based on kind of like winner takes all models. So, for example, OPay is already a public company; they can always raise permanent capital, and there are very few companies in their category on the continent. So I think there's a whole conversation to be had about that. I also think that there's a lot of work to be done in terms of democratizing the venture capital model. The average Nigerian, for example, has 31% of their investments and savings in alternative assets. They obviously know the bank isn't going to give them anything for their deposits, so they try to put their money to work. And why isn't one of those assets venture capital, right? Why can't they invest venture capital on their own? Why do they have to go through many layers of capital stack, or be completely excluded, so that that's only the reserve of DFIs and so on? So I mean, these are also part of the fintech innovations that have to happen for the sector to get a lot bigger. But we're very well on our way there.
Yeah, really interesting. And I know you were just quoted in a major article about this, talking about how so much of the venture capital still comes from overseas, even from markets like Nigeria, and how so many startup businesses in fintech have to headquarter in San Francisco or London or New York, and it's definitely a key structural issue. We're running a little short on time, and one thing I want to hear a bit from all of you is what you think these changes might mean for the people at the very bottom of the pyramid, people who are truly unbanked. There's still a fairly large percentage of some of the major economies of the continent that are either informal workers, they might not have a formal ID, they don't have any kind of bank account system. I mean, do you think there's a chance that these fintech innovations will leave behind whole segments of that market, or are they being designed in the way Darlington talked about in the beginning to include every aspect of the market from the start? Is that kind of in the DNA of these new innovations?
I mean, I'll speak to that. So, I mean, this is the growth. This is the population engine of the continent, right? So nobody's ignoring the bottom of the pyramid. This is the young population, and bottom of the pyramid, poor, financially excluded. These are all terms that are up for debate. These are the youth of this continent and the driver. If you look at the growth between Nigeria and the UK in the next decade, it's wild. It's not even a question about where we should be looking in the heartbeat of the global economy and be shifting. So, I mean, nobody's ignoring these populations. And I think all of the investment, and I hate to say all investment in the market will trickle down and sound like Ronald Reagan, but I do think it's important to realize that when the capital markets flow, the banks lend, and then they bring on, and all of these things happen. And I think, our company serves 32 different remittance companies. And all of the remittance companies that we serve have started in one market with us and grown to a secondary market, some of them third, fourth. A lot of them have capital needs. They come to us for provision of float capital. They come to us to help with reconciliation. They come to us for all these value-added services, some of the things that he was talking about, but even more. And we get that by bringing in our access and our ability to manage risk and flowing that down. And a lot of the retail companies work with each other. The data companies are working with the payment companies that are working with the logistics companies, and you see a lot of cooperation across. So I don't think that's happening in a much bigger way than it's happened ever before. And I think the reason that happens is because we can work with each other so easily. When if I want to work with Flutterwave and Flutterwave, wants to become my client, we can get going in a week. If I want to work with Standard Charter or, a Fortune 10 company, and I'm doing one right now, they're calling me till midnight every single day, and the contracts and the lawyers and the legality, the nonsense, right? So I think you're seeing the ability for these companies to quickly take advantage of the whole vertical to serve different segments in a way never seen before. And most importantly, to integrate with each other, to see economies of scale, to see synergies happen. And it's just super exciting to see this growth. And when I first moved to Kenya in 2009, there are maybe 2 startups, M-Copa, and that was like a social startup, and, 1 Acre Fund. And now there's hundreds, thousands, and we are finally seeing baby venture capital funds come onto the continent. My first check was from, a senator. There was really no venture capital funds out there. And now we're seeing, now I'm at the place where I'm accessing growth funds that are African-based, private equity funds that are African-based. So we've seen that happen in private equity. We've seen it happen in growth capital. And we're finally starting to see that trickle down. So I think it's been, the last 10 years has been wild growth. And I expect to see that keep going.
Can I say something?
I have sorry, please, by all means.
Yeah. No, thanks. No, I just wanted to say 2 quick points. One is that when I look at financial access across Africa, it has actually increased quite a bit. However, the quality of access is where the problem is. And then, of course, the remaining percentage that have not been accessed, of course, becomes much more difficult to access because the cost increases, dramatically and all that. And I guess there is also a role here for regulation. There is a role for, looking at risk-based KYC, for example, and all that. If you're going to be able to get to the last mile and include the last few, people are not been included as well.
I have a slightly different perspective on inclusion, and I worry that we've been scoring goals in the wrong net. And it's a bit of a heretic point of view. But I think what spending too much time in the market has taught me is that, you can't include somebody who has nothing.
Yep.
So if somebody you want to include is spending 60% of whatever they earn on food, what are they going to keep in the bank? What are you going to lend for that is going to provide a productive return?
Yeah.
What exactly are you including? And, I've had a reflection moment, I guess, which is like, look, I understand the imperative for inclusion, but even the definitions of these things, you must have a bank account to be included. Who does that really benefit when the bank pays me nothing, right? Yeah. You must have a MasterCard to be included. Who does that really benefit when MasterCard won't let my fees go? So I don't know. My honest opinion is that we've been scoring fantastic goals in the wrong net over the last decade. And maybe we want to have a real conversation about trade. We want to have a real conversation about economic inclusion. We want to have a real conversation about invisible barriers to access, right? You look at remittances and the value that they bring to the African economy. And a real question you have to ask is that why do they remain so taxed so high? Why do 40% of remittances have to end up in foreign banks? Why don't we have African banks in the US being able to better facilitate our remittances, or African investment companies around the world who are better able to facilitate investment of remittances? Because remittances are much higher than ODA, much higher than FDI, and we still treat it with so much disrespect and suspicion. So I think those are the real conversations that maybe we need to start to have, rather than scoring fantastic goals in the wrong net.
And I'll just add to your list, social safety nets, right? I mean, should we be saying that it's okay that there's somebody who has to spend 60% of their income on food? Maybe if we can eliminate that from reality by creating the right social safety nets, then people have a chance to enter into a financial market in some way.
I just wanted to say, I love social safety net. Oh, sorry. Yeah. Well, I just wanted to say somebody has to pay for it. And right now, our governments can't.
But that's where growth is also very important, because we also have to find opportunities for creating opportunities for investments and trade, so that the income can increase over time for these individuals that we are trying to target.
Yeah, look, Raj, clearly there's not been enough time, because it's just getting interesting. Because I was going to offer another dimension from what he has said, to say, look, it's a process, it's an evolution, right? Before one graduates, they have to go through primary school, high school. So before we start talking about these sophisticated structures, there is somebody who just needs access. Okay, and by putting mobile phones in the hands of over 80% of African people, we've already created a platform for them to participate. If you look at mobile money, The way mobile money was successful, it was those that were employed who were earning, who were sending money to those that were unemployed and didn't have access to money. So instead of them traveling by bus 4 hours into the city to collect that money, it was now being sent to them through mobile phones. And they started keeping some form of balance and tracking that I've got so much money in my account. They were now exposed to financial services. So that's the beginning of the process. And then you walk with them to the next level, to the other, before you start introducing these other services. It's great what he is talking about, but there are some that still need to be handheld, who are yet to actually understand the services that are way above there. Otherwise, you lose them completely.
And if I can just make my last comment be a very negative one, we also have to be, sorry, Raj. We also have to be very careful of situations like Zimbabwe, right? We're in a cashless society. A government can just say, with a flip of a switch, we want to shut down kind of all kinds of mobile payments, and the damage that bad policy can do in a fintech world is much exaggerated. So it just speaks again to the importance of the work that folks like Evans are doing about getting that regulatory environment right. We are covering at the Milken Institute everything COVID Africa. So please, my last plug is, I have two plugs actually. One is go to our website, COVID19africawatch.org. And Raj, I think the one way that you could have improved this discussion is to give us all DevX coffee mugs in the beginning. So I want mine. We all want ours in the mail. And thank you, at least on behalf of the Milken Institute, thank you for leading such a fantastic discussion.
Thank you, Stacey. Really delighted to do this. And Darlington is so right. We could have gone on for much longer. It just started getting interesting. Maybe to me, the most emblematic part of the discussion is the fact that E, who is an entrepreneur building fintech companies, has spent the last 5 days working on legislation. Right. This is the marriage of these two issues: the policy and the entrepreneurialism in low-income countries in the continent of Africa, in fast-growing economies. You got to do both of those things, right? I think that this conversation has highlighted the need for entrepreneurs to be entrepreneurial in business and in policy.
From his car, no less.
This is maybe just the beginning of a longer conversation we need to have. So thank you, all of you, for following us, joining this discussion from all over the world. Stay tuned for more coverage on this from my colleagues at DevX, and be well.
Okay, thank you.
Thank you very much.